Hello traders, welcome to another market breakdown. We had a great end to the week with our traders taking part in the Turtle Stars gold only competition, and now our sights are set on the week to come. Before we jump into the charts and start marking up levels, I just want to take a few minutes to run through what's actually going on in the market right now, because the context this week is really important. It's one of those environments where if you understand the bigger picture, your trader can become a lot clearer. But if you don't, it can feel very messy. At the moment, the markets are still in a bit of a mixed state. We've seen movement across equities, currencies, and commodities, but nothing that really feels committed or in one direction, just yet. You're getting pushes, but then you're also getting really fairly quick pullbacks. That usually tells you that there isn't a full agreement in the market right now, and that participants are still reacting to incoming information rather than driving those strong trends. A big part of what it comes down to is how data-driven everything is at the moment. Markets are very sensitive to expectations around interest rates, inflation, and overall economic strength. So instead of clean technical trends where price just moves from level to level, you're getting a more reactive price action. Something comes out and the market moves, and then it reassesses. That being said, the dollar is still relatively supported overall. And that's been a key theme. It's not necessarily exploding higher, but it's also not showing major weakness either. It's holding its ground, and that tends to create a bit of pressure across other currencies. So when you look at pairs this week, especially USD pairs, it's important to understand that there's a lot of movement that is going to be tied to how the dollar behaves around all the key data that comes out. Yields are another big piece of the puzzle. They've been moving around in a way that's influencing both currencies and assets like gold. So when yields push higher, you tend to see pressure on gold and sometimes support for the dollar. When they pull back, you can get the opposite reaction. So even if you're not directly trading yields, there's still something that's sitting in the background, influencing a lot of what we can see on the charts. When it comes to indices, we've seen some strength recently where there are also signs that momentum isn't as strong as it was before. That doesn't necessarily mean a reversal, but it does mean you don't want to assume that price is just going to continue higher without any resistance. This is where traders can get caught chasing moves late instead of waiting for proper setups. Gold has been interesting as well. It's been behaving like a safe haven in certain moments, but again, it's not moving in perfectly clean, trend. You're getting reactions to macro developments rather than smooth continuation. So patience is key there. It's not about jumping in early. It's about letting the market show you its hand and, get in a good position. Overall sentiments right now feels a bit cautious. It's not fully risk on where everything's just pushing higher, but it's also not fully risk off either. It's somewhere in between. And that's why conditions can feel a bit choppy. You might find that some sessions move well and others move quite slow or inconsistent. But for us traders, this kind of environment really comes down to being selective. This isn't the type of week where you need to be in the market every single day. In fact, trying to trade too much in conditions like this is usually what leads to mistakes. It's much more about waiting for things to line up properly, letting price come into your areas, and then executing with a clearer plan. Another thing to keep in mind is timing. A lot of traders get the direction right, but they're in the market at the wrong time. They're either entering just before volatility hits or trading during periods where the market is just not moving. So being aware of when the market is likely to move is just as important as knowing where it can go. Going into this week, the main takeaway is that we're still in a reactive data-driven market or environment. That means that patience, discipline, and timing are going to matter more than trying to predict every move. You don't need to catch everything, you just need to catch the right setups when the conditions are in favor. So, with that context in mind, let's move to the chart breakdown, where we're going to break down the key levels to watch, and then we'll go through the major news events that are coming through this week. So with that being said, let's look on over to the charts. We're first going to look at what news we've got this week. Straight away, there's 2 days that I would be watching out for this week, with the first being Tuesday. As you can see, Monday, there's nothing big, but Tuesday, we have got quite a bit of red folders for the Euro. We've got for the GBP, and then we've got for USD. So Tuesday would be one of the days where I am managing positions, moving stop loss up to break even, and just making sure that either I'm closing my trade out or I am able to hold the trade and have good risk management. That would be one of the days that I'm looking out for. The next day would be Thursday. Wednesday, if you do trade Australian dollar, then that would be one of the days for you to watch out for. But Thursday, we've got the unemployment claims as well. Other than that, the rest of the week seems pretty clear. Obviously, Friday, we've got GBP. So if you do trade anything that has to do with the GBP, that would be a day to close out and watch and manage your positions. That being said, I do think we're in for a good week. Naturally said, with everything going on, there is more volatility in the market. And as we said earlier, that the market is very undecisive at the moment. Reason being, when the whole war kicked off, we saw price was here. We saw this gap to the upside, and we saw price push to new highs. Fair enough. When war kicks off, everyone is risk off. They invest into your safe havens. Gold is considered a safe haven, so we saw gold push to new highs, and now we are seeing gold retrace. So this is a lot of money that has been pulled out the market. And the biggest question on everyone's hands is, where has that money gone? Because it's not gone into crypto. Crypto has been very stagnant as well. We've seen oil push new highs, and we know that potentially could continue to push new highs, which is obviously something to watch. But looking at gold, you can see that we at the moment would say technically very bearish. We had this impulsive move to the downside, and then we've had price break, and now we are following good structure to the downside. But if you do look over to the left in terms of the technicals, you can see that price could potentially tap in this area here and push to the upside. On Friday, if you missed the live, I broke down this setup here in the live. We were talking about what New York session would do. I think price was here somewhere, and we said that we would wait for price to break this low and then potentially tap in this area here for some positions. That being said, not financial advice, it's just a trade idea that I would say I would be looking out for. Still very risky setup. I wouldn't just jump into anything. Let's see how the week goes though for gold. Technically, we could potentially see price push to the upside, but then again, nothing happens exactly how we want it to. Looking at oil, we've seen oil push to the upside, and then we had quite an aggressive pullback, but now we are following structure to the upside again, consolidating a bit. So this week I would wait to see what happens with all the oil tankers that are being stopped. We know that America has started to buy oil from Russia. China is buying oil from Iran. So there's a lot of oil moving around, which means that we could potentially see oil price push down. But if things do stop still, and oil companies want to just hold off on supplying, obviously to push price even more, naturally this could happen. We could potentially see oil continue in this consolidation. So oil would be something to watch out for this week. We've got the dollar that has been quite strong as of recently, but right now we are holding out on this resistance level. As you can see, we've tapped in, broke the high, and then dropped down again. We just can't close above. And now we see price break, and then once again break to the downside. So this week we could potentially see the dollar, plummet to new highs again. Well, not new highs, but in terms of the last months, push to new highs. But it's not showing signs of wanting to do that in terms of the technicals. Gold is looking good. Indices, as we can see here, the week closed off with a very strong rejection, but we could potentially see indices push to the downside even more. As we said last week, we expected price to consolidate and then drop. We've seen that price consolidated and dropped. So far, our analysis has been correct on that front. GBP USD also nothing really showing us signs of the dollar pushing to new highs straight away. But we're going to see how the week goes. Obviously, if the dollar does drop, GBP USD will buy. But my eyes are on the dollar to see how it reacts. Looking at the crypto space, Bitcoin has not really moved much. We started to see some bullish momentum, and then we had, I think it was on Wednesday, we had quite an aggressive retracement. So let's see this week if Bitcoin, does push. Then we know that a lot of, the money pulled out of gold and other commodities such as that are being put into the crypto market. But nonetheless, it's going to be a very interesting week for Bitcoin, for crypto, for gold, oil, for indices, your Forex pairs. Everything is dependent on what's happening with the dollar and what's happening with the oil tankers this week. So yeah, best of luck everyone. Trade safe, trade smart, and I'll see you in the next one.